Hi, it's Alan Lausch with Financial Network Analytics, and welcome to FNA Correlations. Last week's most significant market move was the surge in the Japanese yen. You can see here on Thursday the yen spiked up by 3.19 standard deviations when the market was surprised by Governor Kuroda's lack of additional stimulus. So let's look at the asset view. And here we can see that on Friday there was a significant negative outlier in the Japanese yen as some action was expected in the following week. However, markets were disappointed by the lack of action, and we can see a much larger up move. In fact, this is the biggest single up move in the Japanese yen in well over a year. Let's look at what some related asset classes would be as well. We'll take the focus view here, and let me zoom in, and we'll see what the Japanese yen is most correlated to. So the strongest correlation between the yen and our multi-asset class view is a strong negative correlation with Japanese equities. So Japanese equities have been hurt significantly by the rise in the Japanese yen. The second biggest negative correlation is the US dollar index, and that's a negative 0.66 correlation. We'll just click on that here, and we'll see how that's evolved over time. So that correlation has increased with time. And the third is a strong negative correlation with Asian equities, so Asia including Japan. We can see that's a strong negative correlation there. So a stronger yen is certainly bad for broad Asia. There's also negative correlation with the Dow. So this correlation is quite significant, negative 0.56, and a strong negative correlation with financials, negative 0.55. There is a positive correlation with gold. That correlation is 0.61, and that's actually, we can see that correlation even increased to 0.67 the following day. We can see that on Friday, the Japanese yen followed up with another day of appreciation. So this is quite to a new 100-day high. So this is by far the largest driving theme that we're seeing right now in markets. We see that the Japanese yen occupies a favored flight to safety haven. So as the yen increases, generally this is negatively correlated with equity markets. That correlation, Japanese equities at negative 0.74 is at a new 100-day high. We can see it was as high as negative 0.81. The second most popular flight to safety asset is the US 20-year government bond. That correlation is negative at negative 0.53, and you can see that that's been quite reliably negative here. Another flight to safety asset is gold here. Let's put that on the focus view here, and we can see that gold versus the Dow Jones, for example. Let me expand the correlations here a little bit. So you can see gold is fairly negatively correlated now to most equity markets, and the correlation to the Dow Jones is at negative 0.46. So that correlation has been increasing again, and gold has been acting as a safe haven asset as broad equity markets have been in the red. So these were the most significant movements that we've seen in markets. The major resurgence in the Japanese yen, as well as a significant move on Friday with gold and gold miners in a broad flight to safety type phenomenon. So the next week will be quite critical. Please continue to tune in and let me know if you have any questions or suggestions for themes. Alan@fna.fi is my email. Thank you.